crore, and next year also 25,000 crore expected when excluding QRSAM. So both
excluding QRSAM. Okay.
It will be 50,000 crore.
Correct.
Okay.
And if QRSAM comes, definitely it will be additional, around 20 to 25,000 crore.
Got it. So you don't see any slowness that is happening from the government side, which is the fear of a lot of investors right now, that things will slow down and bid pipeline will get elongated. You don't see that happening from the government side.
Budget allocation for the current year, it is in the capital is in the range of 1.72 lakh crore. It has been
Right, sir.
And out of which 1,05,000 crore is earmarked for the domestic procurement itself.
Right, sir.
So means that we do not see any such thing. The budget also says the same thing. So we do not have any such fears.
Great, sir. Thank you very much and all the best for the future, sir. Thank you as always.
Thank you.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. So my first question is with respect to the Sukhoi 30 upgrades. It seems that this program will pick up the pace very soon. Hindustan Aeronautics also expects this order to come in FY25 or at least by FY26. So what will be the different subsystems that we will supply over here? And what could be our work share out of the total order which will be placed on HAL?
Okay. Actually, we don't have exact figures of what HAL may get order. We only know our electronics components which are going to be there in 230 upgrade. So there are various subsystems which we are planning for 230 upgrade, including radar. Because in 230 upgrade this time a radar also is planned to be inducted, Indian origin. So that, then EW system, then some radios and other communication systems. So that way we are expecting in the 230 upgrade around 4 to 5,000 crore worth of different type of equipment. Definitely we will have orders.
So this 4 to 5,000 crore, you are talking about the first set of fighter jets, which will be, I think, 84 in the numbers, or you are talking about the entire 260 units?
No, if I am not wrong, 230 upgrade right now is planned for first 84 or 100 numbers only. And after that only they will go to the next batch. So this first one itself, we are expecting this much order quantity to us.
Understood. Sure. Sir, my second question is with respect to the Netra airborne warning systems. So has there been any progress on that in terms of DRDO finalizing who will be the production partners for various systems and subsystems in that? Given that Air Force has projected a requirement of around 12 more such platforms along with the 6 that they are already operating at the moment, this could be a potentially very large opportunity for us.
Yeah, definitely AEW&C is a large opportunity and strategic importance for us. So this Netra, you may be knowing, we are supporting them. We are maintaining those aircrafts as well as a lead agency, and we have right expertise for this segment. Various subsystems which are planned now in the next order are already in pipeline. We are having discussions, including some radars which are required for this. This time we are going to indigenize some of the radars driven by DRDO, but BEL is one of the potential partner for them for these radars. So radars, EW and communication. Again, all the 3 subsets in this AEW&C, there is a large opportunity for us. Right now, confirmed order point of view, we don't have, except maintaining AEW&C for these 3 platforms. That itself is a very good opportunity for us to understand all other subsystems, and we are in the process of indigenizing many more subsystems in that.
Understood. So just a small question on LCA Mark 1A and eventually Mark 2. Has there been any decision on who will be the production partner for the Uttam radar? So will this be on a single vendor basis, or the order will be divided in certain ratio between 2 companies?
As of now, Uttam radar for first batch of our LCA Mark 1A is given to HAL. HAL is the lead agency, and they will take the radar related modules from 1/2 companies, That decision is not yet taken, but lead integration for this radar will be done by HAL for the first batch. Next batch, they may review based on the performance and other things, other parameters, or they may select well also, but as of now, it is HAL who is leading all the integration activities.
Understood, sir. Thank you very much for answering my questions and all the best.
Okay, thank you.
Thank you. The next question is from the line of Mohit Pandey from Macquarie Capital. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So first question is on the potential QRSAM order next year. So how big could that regiment be, the one possible in April to June next year?
No, we are expecting more than 25,000 crore order for QRSAM, but the value may change based on the final configuration, number of regiments, number of missiles to be added as per regiment, etc. That is a strategic call which our Indian Air Force and Indian Army are taking. So final configuration will become to know only when AON is awarded. So that we are expecting very soon. So once that is there, we will get the final figure. But definitely it will be 25,000 crore and above.
Understood, sir. So secondly, what would be the proportion of space and services now in the business mix?
Presently, it is around 11% services during the first quarter. The services are around 11% and goods are around 89%.
Okay, so that's as a proportion of the defense business. This excludes the civilian.
No, I'm telling overall services.
Overall. Okay. Okay, sir. Sir, and thirdly, within the current order book, what would be the proportion of repeat orders? For example, orders that you've executed previously and getting repeat for broadly?
We don't have the exact quantification of what are repeat orders, but we can always tell it is like, for example, after squadrons, we had got earlier 6 squadrons, later on we got 7 squadrons, and the last time we had got earlier for 4 ships, and again we got for 7 ships. So, but the exact quantum of the repeat orders at this portion, we do not have the information.
Okay, sir. Sure. And sir, lastly, on exports, so as of now, which would be the top 2-3 countries where we are exporting products to?
Major exports right now is medical electronics related, TR modules for France, and compass for Mi-17, etc., gimbal and other things for LB design. So these are the major projects which we have executed in this quarter. Overall, we are received orders recently, major orders. That is for onboard naval equipment from L&T for SEZ export. Then something for Airbus. We have got big order for P295. Solar power plants for Guatemala, we have got very good order now. Then TR modules, 6 and 8 channel TR modules for TRDS, Thales Reliance Defense, that we have got good order now. And compass, also a good export order from Israel, and we have received.
Great.
Recently, we have received an export order of 25.75 million euro. That was from TRDS. So that is for supply of TR modules for various platforms, airborne platforms for them.
Understood. So last question is on the other income. So is there any one-off in the other income, or is it largely interest income on the term deposits?
Interest income only. Lastly, it is on interest income only.
Okay. Sorry, sir, I missed the last part.
The other income increase is due to the interest income.
Understood, sir. Thank you. Thank you so much, sir, and wish you all the best.
Okay, thank you.
Thank you. The next question is from the line of Dipen Vakil from Phillip Capital. Please go ahead.
Thank you so much for the opportunity, and congratulations on a great execution. So my first question is, so you gave us a segmental breakup of services and goods. Can you give a similar breakup for defense and non-defense?
We have the defense and non-defense also. 1 second. This defense is 84% during the current quarter, non-defense is 14%, and exports is 2%.
So, and going ahead for FY25, do we expect that to maintain like 80-20%, or how do we expect defense and non-defense split to be?
15%. 85% defense, 15% non-defense, typically.
Okay. And this year, so as you mentioned that we have 25 different line units working simultaneously. So any Capex plans that are there for FY25 and any capacity augmentation plans?
See, Capex we are already telling, your question was on Capex, na? Hello?
Yes.
Your query is on the Capex.
Okay.
No. I did not get
Your question. Can you repeat once more?
Yeah. So I'm asking you about your Capex plan for FY25.
Capex is around 800 crores is planned during the current year.
Okay. And what areas are we planning to do this Capex on?
There are quite a few factories coming up, as you may be knowing already. One is coming up in Palasamudram, one is already almost completed in Nimaluru, one more is coming up in Hyderabad in Ibrahimpatnam. So 3-4 factories are coming up. One more is coming up in Nagpur. So these are the ones. And then in addition to this, there are some capital equipment required for the production purpose. So those are also there. All this put together is what 800 crores I am talking about.
And how many of them will be operational, say, in FY25?
FY25, Mastipatnam unit will be operational. Nimaluru, what we are talking. All others will be in the next year.
Got it, sir. So, last question a little bit on the strategic part of it. So, the government has announced a positive indigenization list, and there have been like 4 lists where BEL has been given a certain components that they can only procure from Indian players. So how does BEL view this move, and is there any issues with scaling up or supply chain issues that the BEL faces in procuring any components, or how has been the BEL's experience with entire PIL?
Okay. Our experience of entire PIL is very, very good, because these PILs are at system and subsystem level. So these system and subsystems, which were earlier imported, now we have indigenous capability to develop them, either our own or with the help of DRDO. So that confidence we have given to our defense users, and that's why they have come out with these PILs based on our capability. So system and subsystem level, we are not finding any issue. But of course, at component level, indigenization is going at very slow pace, component and material level. So that will take its own time, because that requires different type of infrastructure beyond our control, like fabs, digital fabs and other things, and even material processing related things. That will take 5 to 10 years to become really indigenized, most of those component level indigenization. There also we are attempting to develop some of the technologies, including some of the chipsets ourselves. Fabless designs we have already started, but once the fab comes in India, we wanted to be the first user of those fabs for strategic importance IC, for which we have already started developing fabless designs. So over a period of 5 to 10 years, it will take to run reasonable indigenized on component level. But at system and subsystem level, whatever PIL dates are committed, we are confident we will achieve that indigenization definitely much earlier than the committed date.
Got it, sir. Got it. So thank you so much for answering my question. All the best for FY25. Thank you, sir.
Okay, thank you.
Thank you. The next question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, sir. I hope you can hear me fine.
Yeah.
Yeah. So just wanted to sort of understand, last year we had some issues with Israel-based supply chain. Is there any sort of revenue that we got this quarter, which was a sort of issue that, in Q1FY24 we couldn't execute that, and that has sort of helped us in execution in 1Q, or could help us in 1H?
Yeah, to some extent, because the Israel war has impacted us little bit in last year. This year, our indication for the first quarter shows that it has eased up. Like I told now, around 800 crore plus execution we have done for our LRSAM program. That itself shows that overall situation is in the right direction for us.
Sure, sir. Maybe just 2 follow-ups. One, we wanted to sort of understand our contribution to the Pinaka system? And second, just wanted to understand on the fifth indigenization list, what could be the quantum of value of products that BL would have to indigenize over a period of time?
Pinaka per se, we are not having direct contribution. We are only supplying some subsystems related to communication interface and other things to other companies, because Pinaka order is received by other companies, not by BEL. But we are supplying to those companies some subsystems. Okay. Right now we don't have any plans to manufacture Pinaka because that is a long-term process, and we are just developing our capabilities for manufacturing Pinaka, but it will take some time. But of course, we are supplying some subsystems which are required by these agencies. And your second question was regarding PIL.
Yes.
PIL, as such, we don't quantify how much business we are going to get, because PIL only gives the direction that these items in future, as a cut-off date, will be procured from Indian companies only. But the future quantities there is not committed right now. So that data, as and when that cut-off timeline happens, after that only Government of India comes out based on AONs and others. So then only we can quantify the exact business volume. But definitely there is a requirement that we know. That's why we are indigenizing. That's why we are putting efforts to develop those technologies. But exact quantification of business, it is too early to tell that.
Sure, sir. Those are my questions. Thank you.
Okay. Thank you.
Thank you. Ladies and gentlemen, this is a gentle reminder. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Thank you. The next question is from the line of Amit Mahavar. Please go ahead, sir.
Hi, sir. Congratulations on the great set of numbers. I just have one question on FY25 and 26, the recurring base orders rate of 250 billion X of, say, next year QSM. What percentage of this is where we are going to have repeat orders or upgrade orders, and what percentage is the first time supply of any subsystems?
Okay, let 1 minute. The list. So I think QRSAM is first time for us. MRSAM and MF Star, the second biggest order which we are going to expect, that may be partially repeat only. Third biggest order, again, LoRa is new order. So fourth again is repeat. So I can tell you around 50% you can assume as repeat and 50% as new. As of now, what looks to us. The order, DJAC, so many other programs are there which are first time for us. So more or less it is around 50-50 we can say. 50% may be repeat orders and 50% are new orders based on the efforts which we have put over last 3 to 4 years.
Okay. Maybe I was more asking about X of MF Star, MR and QRSAM. I was more asking about this year and next year we have 50,000 crore worth of orders which are excluding these large programs. I was asking in that number, sir, if 50-60% is a repeat order or, more than that.
No, excluding this also, the equation will be more or less similar only.
Same, okay.
Around 50% you can assume as a repeat order, 50% is a new order.
Fair. And broadly, what percentage of these would be, nomination in terms of, again, this year and next year, broadly?
Nomination as of now, these programs, because we only have put all the efforts and these are strategic programs where we had put for last 6 to 8 years R&D efforts. So many of these programs are single tender for us.
Single tender.
Because we only have done all the investments in that. So as of now, I think out of the leads what we have or what is the future projection, around 70 to 80% will be, we are expecting to be single tender.
Single tender, same now. Very helpful, sir. Thank you very much, and wish you good luck. Any change in terms from MOD in terms of the working capital requirements or the criteria of when you submit the cost sheets and get the approval? Any important changes have happened, which you want to highlight, sir?
No, nothing. They are going in right direction, and this is the right combination right now itself. So no major changes expected.
Thank you, Mr. Jain, and good luck to the entire team.
Okay, thank you.
Thank you. The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Good evening, sir. I hope I'm audible.
Yeah, please carry on.
Yeah, my first question pertains to the operating margins, which have been on the higher side so far, at least in the last financial year and the start of this year, with reference to your past guidances. So, can you just help us understand are these improvements sustainable, and what is a sustainable gross margin and operating margin we should look for?
So we had already guided for a gross margin of around 40 to 42% for the current year and an EBITDA margin of 23 to 25%. So which we maintain this guidance even now.
23 to 25 EBITDA and 40 to 42 gross.
Yeah, 40 to 42 gross, 23 to 25 EBITDA. Yeah.
Okay. And I think at the close of FY24, you had indicated that, a mid-teen sort of growth is sustainable going ahead. Do you maintain that sort of a growth guidance is possible for this year and the coming 2-3 years, given your order book?
The current year revenue guidance, we have already given a growth of 15% as of now. We have got a 76,000 order book, and 15% growth guidance is what we have given. Current quarter, as you know, we have already grown by 19%. We maintain this revenue growth guidance of 15%. As far as the next year is concerned, I think it's a little early to comment on that.
Based on the QR7 and other bigger programs development, we may see at the end of this year, before end of this year, we will definitely revise our estimates in case we get this order in time.
Okay. And for the KAVACH system, when will you be able to, come out with your prototype, and perhaps also when will you be able to, do commercial supplies?
Right now, this KAVACH system, Railway has told us to develop based on our capabilities and based on our some proto development, a test bed we have created. Based on that, they have given confidence. They have given us around 18 months timeline for developing of the proto. We are confident definitely we will achieve it before than that only. And after that only the commercial business related orders can come. So orders are expected after 18 months to 24 months timeline only, not before.
Okay. Is there an interoperability related issue or challenge that needs to be resolved for KAVACH before you can a software interoperability or issue which can lead to maybe some delay in commercialization?
I don't foresee, because right now also I think there are 3 operators, 3 persons, 3 companies where the order is coming, and they are reasonably interoperable. Of course, interoperability as the technology moves forward and some obsolescence issue comes, etc. Sometimes some patch or some other hardware may have interoperability issues. I think for that, Railway has come out with some software test lab, where again BEL also wants to contribute for establishing that. So that lab, once it is in place, it will solve this interoperability issue to large extent. But as on today, it is not present. But we may foresee sometime because of technological obsolescence and other things. So for that, they are going in right direction for that, and we also have studied that requirement, and we are developing our system keeping that requirement in mind.
Okay, sir. And sir, from a supply chain perspective, I think at least for the missile programs, there has been some issue in getting some subsystem supplies from either the Israeli or the Russian companies. Is that now completely resolved, or do you see some of this, especially pertaining to MRSAM, perhaps creeping up and coming back in the future as well?
No, it is not resolved directly. Although these components have not directly affected BEL, it is affected BDL a bit more. So this question you should actually ask BDL team. But I know based on our technical interaction with them, because for these programs they are my partner. So we are having a lot of queries and other concerns we are sharing mutually. So the situation was problem, but we are in the right direction and it is under control now. There were some challenges because of some supplies of subsystems from Israel, as you have rightly told. But that challenge is now overcome. Now it is the volume game to catch up again for this. So that is happening. And exact quantification, I think BDL team only can tell you better.
Okay, sir. Sir, finally, from my side, I mean...
Sorry to interrupt. I request Mr. Gagan to return to the question queue for follow-up questions, as there are several participants waiting for their turn. The next question is from the line of Vipul Kumar Anopchand Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, any progress on MOU we had signed for battery management system and any progress on SaaS initiatives?
This battery management system, are you referring to the Triton one, which we had told 1 or 2 years back?
Yes, sir.
So that as we already told, we are not factoring that, and there is no progress on that. We are not factoring that into our order intake also, and there is not much progress into that. So we are not counting on that.
Okay. And sir, one small suggestion: if you can put a presentation on your site where all the orders are pertaining to which programs are there, that will be really helpful, and the orders executable over what time frame. It will really help us to understand the company better. This is a small suggestion, sir.
Please understand one thing, that we are in a zone where we have got our other players also into this. So listing out all the programs, telling about all the programs is a bit of an issue. So whenever you are asking anything, we'll be able to tell what are the programs going on, whichever can be told. But there could be certain other programs which we would not like to tell at this point of time. So it is like that.
Okay, sir. Appreciate it. Thank you so much.
Okay, thank you.
Thank you. The next question is from the line of Satya Sridhar from Satya Sridhar Stock Research. Please go ahead.
Yeah, thank you for taking my question. Congratulations for the good results, sir. Sir, your order book is showing 76,705 crores. Okay, this is a much bigger number compared to our annual turnover. How many years would this be executed in? And do you need any new capacity expansion to execute this?
Our Capex plans are already in place to facilitate the growth. What we are talking of 15% growth, what we are planning this year, and of course for next year it is early to tell. But some of the factories are coming up. This all will facilitate the growth of 15% what we are envisaging during the current year. And 76,000 order book, as we tell that it is of course around 2. Generally we are expecting to have a order book to revenue ratio of 2 to 3 times generally.
Thank you.
Thank you. Ladies and gentlemen, this is a gentle reminder. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir. My questions are on our fuses segment. So we were supposed to supply around 500 crore worth of fuses every year. So how much have we supplied in Q1?
Let me check. We may not have that much detail, but we are continuously supplying fuses now since I think last 1 year. And production is going on, and the fuses are not like a pulse. They are a continuous supply. So you can assume, although I don't have the exact data, but you can assume it was a fair assessment, 500 crore. This year also we have planned roughly. So divide by 12 into 3. Roughly that much value will be there, but exact value I don't have. But because this production is a continuous production type of thing. So exact data I can share with you later on. But you can roughly assume this is the figure. So around 100 crore you can assume was there in this from fuses.
Sure. So just wanted to check, do we have any capacity constraint in this, or we have enough capacity to supply this 500 crore worth of fuses every year?
No, definitely there is a small capacity limitation. because it is indirectly not a capacity limitation, but the Pune unit we are doing so many other products also. So that's why these fuses we wanted to open up a new line at Nagpur. So over a period of time, so next 1 or 2 years we can sustain this type of a production here without compromising on our other products which are being manufactured at Pune. But over a period of time, we wanted to do all the manufacturing of fuses in our Nagpur plant.
Sure, sir. And what is our current indigenization of these fuses?
This is more than 50% already is there, but we are targeting 80 to 90% in another 2.5 years.
Sure. And sir, on this last question was, we had done an MOU with Rosen for an export Russia for various kind of ammunition. So, if you can talk about the same, will this help in increasing the indigenization of the current supply which we need to do? Or this is a very separate product and separate? And if it is a separate product, what kind of opportunity can we look at from this time and these products?
Okay. Firstly, this is a totally different product than whatever products we have handled till date. But it is similar product. Like it is you can say it is a upgraded version of the fuses what we are supplying, and it is for the different type of ammunition. We have just signed an MOU right now. The details of the business volume, work share, keeping the indigenization content more than 50%. Those detailed discussions are on the way. It will take another 6 months to 9 months to settle. And then only we can come back to you with the exact quantification of the total business opportunity. But business is huge in this segment, and it is strategic in nature in our line of business only. That's why we have signed this MOU with them.
Sorry, just clarification. This is for...
Sorry to interrupt. We request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Gagan Thareja from Ask Investment Managers. Please go ahead, sir.
Yeah, thanks for taking questions again. So my first one is, I think you are in the process of building up 4 or 5 new facilities. Can you share, are they targeted at increasing in-house content, or are they targeted at increasing revenue, and what sort of impact they can have on top line and costs for you?
Based on today's order book and revenue guidance, what we have given, it is 76,000 crore and a 15% growth target in revenues. Now, as we go forward, obviously we'll be planning for more growth. So to facilitate this expansion, as the volumes go up, to facilitate the expansion, we require new factories. So that is how Hyderabad factory, we are building one more factory. For Machilipatnam, we are doing one more factory, because Machilipatnam factory was of a small size. So we are going for a larger factory, slightly larger factory. One more is coming up in Palasamudram, also in Andhra Pradesh. So these are the facilities to facilitate the growth what we are planning for the coming years.
So in-house development means indigenization definitely is there at all the factories all the time. So it is not that because of in-house activities we are developing the factory, but every factory, wherever we are investing further or where we are producing right now, in-house development and indigenization is the main key today.
Okay. And sir, I mean, Bharat Electronics has always stated that a lot of work related to combat helicopters and aircraft and naval frigates and destroyers comes to BEL. I think a lot of orders have been placed for naval platforms. A lot are there in the pipeline. Likewise for LCA and LCH. What is your scope of work, and what potential order pipeline do you see from this?
So definitely the big platforms of naval variety or airborne variety, majority of the electronics comes from BEL. So huge business opportunities there for us for all these programs, either directly from users or through HAL or MDL or GRSC, etc. So huge opportunities. That's why we have anticipated more than definitely 25,000 crore plus per year order acquisition. So right now, this year we have planned 25,000. Definitely next year we will come out with a more revised figure, keeping these business leads in mind. So these all business leads we have captured, and based on that only we are having our future projections we are making.
Okay, but is it possible to separately quantify what could be the pipeline from these platforms? Even a ballpark approximate quantification would help.
That only happens when the AON is granted. Because with AON, the tentative budgets also are there for the quantities. So right now we have quality, means we know these type of products, we are either BNE or we have the right product. But the exact quantities of each one of the platform varies just before AON. So after AON only this will be better quantified for the thing. Till now we have our own market leads. Leads we can't share at this moment to you because this is a strategic marketing confidential data for us. Okay. So as soon as it becomes public domain as AON, that time we will definitely come back to you.
Okay, sir. And on the missile.
Sorry to interrupt. We may request that you return to the question queue for follow-up questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to one per participant. Thank you. The next question is from the line of Hardik Rawat from IIFL Securities. Please go ahead.
Thanks for the opportunity. Sir, I wanted to ask you with regards to the recently concluded Defence Acquisition Council, wherein when the council has decided to pass AON for advanced land navigation system for Army. What is this? What scope does this entail for us as a company in terms of order pipeline, and when should this turn into order inflows for us?
We have already supplied ALNS for the Army, but that was not having this capability of IRNSS. NAVIC, you call it now in the civilian domain. So in the defense domain, we call it IRNSS RS capability. So now they have come out that they want newer tanks with this ALNS having capability of IRNSS. That proto we have already developed for that and demonstrated as a technology. Now after AON, there is again a long-drawn process of issuing RFP, and then sometimes they ask for LCNC trials once more, although we have given them some proto demo. So after that only the real order comes to us. We expect an order of the order tune of 500 to 1,000 crore in this lead itself.
So the 500 to 1,000 crores in total for under ALNS, or 500 to 1,000 crores for this year?
No, not for this year. ALNS.
For ALNS?
May not come this year because it's still that RFP, then PMC, then placing order. It may go, maybe we are lucky than this year end, otherwise next year only it may be. So not this year, and execution will become 3 to 4 years because these are also for various platforms, so it takes its own time. Logistics and other issues are there for users also. So generally, based on our previous experience, it will be spread over 3 to 4 years.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Thank you for the opportunity, sir, and congratulations on good set of numbers. Sir, can you give me a basic order book in terms of commercial, defense, rail, and other sectors? Is it possible?
Okay, the order book of the 76,000 crore, you wanted roughly in different heads?
Yes.
Around, yes, let me see whether I'm having the data to that granularity. Just 1 minute, please hold on. So, percentage-wise, defense is around 85.8%, and non-defense is around 11.3%. And around 2.9% is export. So that is the breakup between the defense, non-defense and export for this order book which we have currently.
Okay. And sir, so just as in the years to come, the same mix would be there, or the mix would be changing in terms of defense and non-defense?
So typically we are aiming average is 85-15. 85% defense, 15% non-defense. Minor 1 or 2% variations are there between these combinations. Because of the different type of product mix, sometimes it happens, but on an average it is 85-15%.
With KAVACH coming, will the non-defense value go up in terms of percentage? And what is the size of the opportunity for KAVACH, sir?
KAVACH is actually a very big program, and right now I believe railway is struggling with the supplies. Means vendors are not able to supply the quantities. Knowing BEL infrastructure and capability to invest further by BEL, that's why railway has come forward to us for this development. So, but it will take, as I told earlier also, some 18 to 24 months to start generating business or revenues from that business opportunity for BEL, because any order will be split across all the qualified vendors. So, of the order of 20 to 30,000 crore business opportunities there for BEL, spread across 5 to 6 years. Maybe 4 to 5,000 crore per year is the business potential for BEL if we successfully complete that. But that will be after 2 years from today. Tentatively, these are figures which we are looking at.
Okay. Thank you and all the best, sir. Okay, sir.
Okay, thank you.
Thank you. The next question is from the line of Himanshu Mandal, an individual investor. Please go ahead.
Hello, sir. Congratulations for the good numbers, and thank you so much for giving me the opportunity to ask. Sir, see, technical questions and financial questions, as I'm individual investor, so those questions and answers I'm hearing, and I'm so positive by holding my stakes with BEL. I have only one, maybe a question in others' mind as well, is BEL also planning to give some bonus to their investor or something like this? Because other questions, technically, people are asking, and I'm totally happy with those answers. Thank you so much.
So we would not like to comment on such things at this point.
Okay, sir.
We can't tell that until we have a board approval and others.
We cannot comment on such issues now.
I totally understand, sir, but this is just my first time, I'm joining these kind of calls, and I'm totally happy the way BEL is performing and holding their next assignments and previous assignments. So thank you so much for answering my question at least.
Okay, thank you.
Thank you. Ladies and gentlemen, we are taking this as a last question. I now hand the conference over to Mr. Harshit Kapadia for closing comments. Please go ahead, sir.
Thanks, Shubhangi. We would like to thank the management of Bharat Electronics Limited, Shri Manoj Jain, Chairman and Managing Director, Damodar Bhattad S, Director Finance and CFO, Srinivas S, Company Secretary, for giving us an opportunity, and to all analysts for asking all the questions. Any closing remarks do you want to share with investors, sir?
Yeah. So future outlook, as was told earlier, we are committed to that. The revenue growth of 15%, the EBITDA margin of 23 to 25%, and order inflow of minimum 25,000 crore. So these three definitely we are giving further guidance or reassuring that we are going to achieve these targets in this year.
Thank you, Mr. Ashit.
Yeah. Thank you, sir.
Yeah.
Have a good day.
Thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Okay. Thank you.
Thank you.